All right, hope everyone's doing well. This is going to be an update on the USD dollar yen. And flip over to it. So let's start with higher time frames. Monthly chart, strong bull channel. However, fairly deep pullback. It's close to 50%. It was a 50% pullback from here. Anyways, deep enough that there will be a lot of disappointed bulls if we get back up to here, which I think we will. So this month, we're trying to set up a decent second entry buy. And I think we'll ultimately get back up to here. I believe we definitely will get up to here. However, the problem you have is 3-4 bar type trading range, and really, even if the signal bar closes on its high, it's still within the trading range. However, I think the bulls that buy anywhere in here will make money, but they probably need a wide stop, maybe below here at a minimum, preferably below here. So I think strong enough breakout, probably second leg up, and we'll test it here. Weekly chart, more of the same, tight channel, trend line break, trying to form some sort of a major trend reversal. Deep enough pullback that we will probably have disappointed bulls. You can see we went outside up last week. However, look at the entry bar. The close was 111.25. The high of this bar was 111.41. So we closed almost 20 pips below the high of this bar. What does that tell you? Well, it tells me that, if you look right here, you're obviously in the trading range, and trading ranges usually they have disappointment. If the bulls were strong, this bar would have closed on its high up here, but they were not strong. All right, let's look at the daily chart real quick. And real quick, looking at the weekly chart, strong rally, but look at the follow through. We've going sideways. And that is somewhat, let me just highlight this so I remember to talk about it. And this was a warning. I'll get back to that in a minute though. So again, strong breakout. And when you see this bar, you know the market's going higher. However, higher just simply means a second leg, really. And you have to pay attention to context. So strong breakout. This is the daily chart. We had a strong breakout. Look at the follow through. Terrible follow through. If the bulls were really strong, we would have gotten a bear bar, and then another bear bar, and then another bear bar, or in this case, a bull bar, and follow through another bull bar. So while you can make the argument, this is a bull bar, more of a neutral body. It's a bear bar, but not a great signal to short. And then another bull bar, so it's follow through, sure, but it looks like a leg in a trading range. 3 pushes up, 1, 2, 3. You're at the top of what's likely a trading range. We went above this high, starting to turn down. So we're still in a trading range. Now, I still think this is tight enough that we will get a second leg. I think there's an obvious target here that we will probably close. That's the high. This is the major lower high. You can argue this was the major lower high, and we'll went above it. So either way, I think we're in a trading range. We're the early stages of a bull trend on the daily chart. However, when I say early, I mean early. Just look at this chart. Do you really? I don't want to buy here and put my stop down here. While I would rather buy than sell, just because You're getting big bull bars. We haven't had a decent sized bear bar in many bars, and the bull bars seem to be stronger than the bear bars. We could still pull back all the way to here. I do think we'll get up to this high, and potentially up to this high, but yeah, I want to see more. To me, this is very neutral price action. 60-minute chart. Again, more of the same. Bear breakout, channel down, 3 pushes, 1, 2, 3. I'll go ahead and draw it. It doesn't have to be perfect, but you just have to understand what's going on. So you can call this part of the breakout, you can call only this the breakout, you can call this the breakout, you can call this whole thing the breakout. Anyways, it's a leg down, pullback, and a second leg. Very often, let me just check something real quick. Maybe it's here. Yeah, so you can see right here. This is, I didn't draw it perfect, but depending on how you said, where you said the breakout was, let me go ahead and just kind of prove a point here. So we'll start with the smaller one first, and then we will, so look right here. Okay. There's your leg 1, leg 2. If I project it up to here, which I think most traders were looking at, this is leg 1, leg 2. Look where it takes you. The exact low of this move. So anyways, but you don't have to see that. You just have to know. You don't have to try to find that. You just have to know that it's a bear breakout. We're starting to go sideways. Odds are second leg. However, look how long we went sideways. Turn my snap mode off. We went sideways for a lot of bars. And this tells traders, yesterday I was talking about, someone asked me a question about wide stops. And stop placement has everything to do with the market cycle, as with any trade setup. Look right here. See, traders are aware that this is, think of the logic. Sideways for a long time, we break strongly to downside. And I know I used this example yesterday, but I want to kind of look at it in a different light in terms of reviewing the chart. Sideways for many bars, strong enough breakout for a second leg. This second leg, it looks strong, but bulls will probably close this gap. It's a trending trading range. Trending trading ranges usually get a breakout sideways, another breakout sideways, and you meet back in the middle of the range. What does that technically create? Well, it creates a broad channel. Broad channels is just a broad channel is a sloped trading range, and a trading range means both sides are making money. So bears are selling above bars, selling bear breakouts to the downside, and they're scalping out. Bulls, they're buying many points below the next low. Look over here. They were willing to buy sooner. Bears were taking profit sooner. So sold off, rally back up to the highs, and this is kind of a smaller version of this. Basically a final flag. The bulls know that, bears and bulls both know that if we break below this big trading range, so let me kind of back up, give a small little lesson here. Trading range, bears know that if we break below it, as do the bulls, at some point we'll probably come back to this level. So many bulls, I wouldn't do it, but it's profitable. Many bulls will simply buy here. You just kind of, one thing that helps, if you want to, I do it all the time, is to think about ways to structure trades in both directions. One thing you could do that I'm sure many institutions would do, as well as just regular traders, especially with Forex, is when I say especially Forex, I just mean you can trade smaller, so it's easier for traders like you and me. Bulls will buy either of these lows, and they will scale in somewhere down here. So what they're going to do is they're going to buy either of these lows, and maybe they'll put a target initially. Let me walk you through it. So maybe they'll get long here during this breakout. And they'll set a target up to here, and they'll scale in more down here and put a stop somewhere down here. Sells off, sells off. You know, let's assume if they scaled in here, maybe they get out back over here. Which I think many traders would. Bear breakout, second leg, probably going back up to here, probably not a lot more down. So this is that example of traders will buy in here. They won't put a stop here. Maybe they'll put it a little below, and they'll look to buy somewhere down here, and then they'll scalp out, and they make money. Bears are doing the opposite. Bears are selling, scalping out, selling up here. This is a smaller version of this. Bulls bought below, price came back. So ultimately, I think we will get back to, I know it's not perfectly horizontal, but ultimately I think we'll get back to the midpoint, somewhere around here. There you go. Why? That's because the market gravitates towards what it's, the market obviously likes trading ranges. That's because it's fair value. The market's goal is confusion, and it's looking for a price that the bulls see is not too expensive and the bears see is not too cheap. So they're willing to be flexible. In here, starts to go down, bulls will buy, they'll scale in, price comes back, starts to go up, bears will sell, scale in, starts to come back. So that simply means as it's going down, bears stop selling, bulls buy aggressive, gets back up to here, bulls scalp out. As it goes up, bulls stop buying, bears start shorting aggressively, comes back to the middle, bears scalp out. Once it starts to go down, bulls start buying, then they start buying aggressively, back to the middle, they scalp out. Here, more of a trading range, big down, big up, sideways. You can call it a triangle, 1, 2, 3, but it's the same concept. The bulls know that we went down here, price turned up, closed the gap, so what are they going to do? Well, they're going to buy a new low. And they're going to buy more aggressively at the new low because even when price broke down, when price went, how many pips is this? 10. Even when price went, what, 100 pips, something like that, below, they still buy. So here's a bear. I'm trying, or hope I'm not drawing too many things. But and this is kind of a good example of a channel that's broad and you have many trading ranges in it. So bulls bought. They knew that bears were going to scalp out, so bulls would buy aggressive, close the gap. Now you have two clear reversals up here. Well, let me do this first. This is obvious a trading range. Obviously a trading range. Let me just kind of get rid of this. Try to walk you through it better. So at this point, I'll draw these lines in a minute. I just want to kind of show real quick how I view channels. So again, this point will break out strong enough for a second leg. We're going sideways. Here, I don't know where the channel is. For all I know, I'm not going to draw that just because that's probably not the channel. But it's kind of a warning that we may be going down. Strong breakout, sideways, going down, going down, going down. Now I'm thinking, okay, we're getting low below the prior low. We're probably going to, so bulls are probably going to start buying. Bear breakout, second leg, but I don't know where the bottom is until we reverse up. And that's with many channels. You often don't know where the bottom is or the start of the channel. Or excuse me, you know where the start of the channel. It's here. You don't know where the bottom is until price is already reversed up. Now I'm thinking it may be here. Now, starting to go up, So at this point, I'm starting to draw lines and kind of play with it. So we have an obvious bottom. Typically, I don't do that. What I typically do is I look for a bottom in a bear trend. I look for a top in a bull trend. So in other words, the trend, I look for a trend line. In a bear trend, the top is the trend channel line. In a bull trend, the bottom is the bull trend line. You can call them both trend lines, but I like to, this is all from Al Brooks, I like to separate them. So I'm going to make a parallel of this line as I did here. So back to what I was saying. I draw the bottom, I make a parallel of the top. You can do it like this or here, really doesn't matter. You have to remember trading ranges and channels, they're really a range. So there's no exact point, close is close enough. And then when I see price come up here, I want to see price start to turn down. And when it turns down, I'll make it more approximate. So we're going up. And then we're starting to sell off. So this could be just a pullback and a second leg up. Okay? Turning down. So at this point, we're getting three clear pushes, First push, second push. Maybe this is the third push, and this was a breakout below. And then, which would mean if I made a new parallel, make more exact. And then you can see right here, strong breakout, typically broad channel, gets a bull breakout, test up. And you can see we tried to reverse down into the channel. And it appears that we're failing. Came close to these highs. Now, at this point, we're really in a trading range. So let me just really kind of talk more about the 60-minute chart. As you can see, strong breakout, probably exhaustion though, late in the trend. Bulls immediately bought. So if you're short, and I talked about this yesterday, if you're short, you see a strong reversal like this, you got to get out. It's just, that should not have happened. And now you have trap bears. And what are those bears going to do? Well, look right here. What did they do? They got out. And if you think about the logic, maybe you sell here, sell more below a bear bar. Price did not even come, wouldn't let you out. If you sold above this bar, sure, you got out. So either way, the whole point is to understand strong enough breakout. This is also a pretty disappointing, it's a big bar right here, but it's disappointing with the tail, disappointing follow through. Many traders will look to buy some sort of 50%, maybe 50% of this bar, didn't get filled. 50% of this bar, of these two bars, this low to this high, they got filled. Traders, and the reason they do that is because if you buy 50%, put your stop down here, set a target up here, it basically gives you a 1-to-1 initial risk reward. However, your actual risk is very small, here to maybe here. So the risk reward is really good. So anyways, bears that were short, clearly they gave up here. So when you see this bar, you know you're going higher, buy for any reason. And then look, so this is kind of one of those situations where it's very climactic. Buy climaxes, pull back, another buy climax, pull back, another buy climax. So 3 pushes, 1, 2, 3. I could probably draw a wedge in here somewhere if I look hard enough. So maybe one first push, second push, third. Something like that. 1, 2, 3. It's not great, but anyways, one thing to look at is at this point we've been many bars away from the moving average. 23 bars. Find the last time we were 23 bars away from the moving average. So when price starts to do this, enters a tight range, many bears start selling, betting will get to the moving average. Then when you see this bar, you got to get out. And then we're selling off, but then 50% pullback, many bulls will buy, and bears who are betting on a second leg, you may get it, but I would not sell down here. Could be the start of a broad bull channel. And this was, in hindsight, this was your second leg. Then we rallied up. So, but this is pretty damaging for the bulls. You know, the one thing this tells bears is up here, they were able to sell and make a profit. They were also able to make a profit on a stop entry. So this bull trend that we see here is not as strong as we think it is, or as we once thought it was. So when we get to a new high, what do you think is going to happen? Bears are going to sell with limit orders, and they're going to scale in. If you think about it, you know, a lot of traders, I would not necessarily, I was going to say bears will sell and put a stop up here. I don't really think they would, just because this is not really a good place to sell. You're selling deep in a pullback. If anything, I think you're selling up here and putting a stop up here and scaling in. So, as I said, over here, bears will sell more, scalp out. But these 3 bear bars is what is causing all of this. And the reason I'm saying that is because this was a deep, disappointing sell-off that price will have to go sideways. See, we did. So right now, what are we doing? Well, we're in a triangle. It's really as simple as that. 3 pushes, 1, 2, 3, 1, 2, 3. We're either going to get a breakout up, breakout down. What's more likely? I don't know. Obvious targets, lower highs, or excuse me, higher lows. Higher lows, higher lows. So I think at some point, I think we'll fall below this low. The reason I say that, now, yeah, I don't know. I think the odds favor us falling below this low before we get up to here. I could be wrong. And the only reason I say that is because really, I think this is a minor higher low. So let me put it this way. I think we will get above this high. I really do. What I don't know is, I see it as kind of one of 2 ways. I think we're either going to test this low, fall below here, then test up, or I think we're going to go up to here, form a double top, and test down. Now, if we go up first, form a double top, we could easily get something like this, or even possible something like this. The only reason I think that is because this to me is a minor reversal. If you're buying, I wouldn't put a stop here. Well, if I was buying on this chart, I think you need to stop down here, because, and I really think this is very confusing and sideways, that the breakout is close to 50-50. And maybe it slightly favors the bulls because we're in a bull trend, but it's close to 50-50. I'll look at the euro dollar real quick because I know a lot of people like to trade that. I typically trade it very little just because I like the really just because I like the dollar yen more, and I typically like to really try and focus on just one market, just because if you look at any chart, there's an incredible number of trades, and the more you understand what's going on with that market, the better your chances are. So anyways, monthly chart, as I've said before, we're basically in a broad channel. Now the channel is so broad that I wouldn't really even be drawing that. To me, trading range, lower trading range, I think we're going to go up. Now, sorry my voice is a little hoarse. By the way, I've been feeling kind of under the weather the past few days. But I think we will get up to here at some point. We have a logical buy here. Bulls will buy using an incredibly wide stop, and we'll buy more. So I think these bulls will make money. What I don't know is, will we have to get a second leg down? So really, I think traders can buy here and put a stop somewhere down here. I really think the bulls, I think the bulls can buy here and put a stop down here. I really think the bulls need one more bar at least, but they're doing a good job. Now, again, the bulls really do need one more bar. You only have 5 days, so I think this will be disappointing. I think we'll get a pullback, but there's no way I'd be selling, especially after these two strong bars. So again, probably a final flag. Even if we fall below this low, I think bulls will buy. Weekly chart. 3 pushes, 1, 2, 3, 1, 2, 3. We're getting gaps. We have a gap here, and do I think it'll stay open? Probably not. And let me tell you my reason why. I said a few weeks back that I said somewhere over here, somewhere in here is on the weekend, so it's probably anywhere somewhere in here. I said that I was very confident that we were going to touch this moving average. The reason I said it was because we have not touched it in so many bars that it's been about 16, 17 bars. When the market stays away from the moving average for a long time, it usually has to test it. So, look what happened. We went below it finally. Well, weekly chart, we have yet to go below the moving average, and it's been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks without touching the moving average. That is pretty rare. Just zoom out on this chart. Last time we did that was 2014, and we stayed many weeks below. But look how strong this is compared to this. Bull bar, doji. Bull bar, bear bar, that's more of a doji. Strong bull bar, bad follow through. Bull bar, bad follow through. Tight trading range. Look over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bars without a bull bar. Mini trend bars. This is a really strong breakout. This is not a really strong breakout. It's within a trading range. So you see the difference. This is a spike. We're going to have at least a second leg down. It was a parabolic wedge. 1, 2, 3. So it's many consecutive climaxes. Here, and then you can see, we had 2 legs up, sharply turned up to the moving average. Here, I think we're going to go down. Or we don't necessarily have to turn down sharply if we go sideways. If we go sideways, we'll draw the moving average up. So in terms of this gap staying open, I think we'll ultimately will get up to here. However, if we go sideways for long enough, my real thought is I think we're going to have to touch the moving average, and I think the moving average will be somewhere around here when we touch it. So I think we're going to close this gap, and I think bears will make money. So really what I guess what I'm trying to say is I think we're going to get some sort of one logical thought would be a 50% pullback. Maybe we got a 50% pullback, and that takes us a little above the range. Either way, I think we're always in long. Stop down here, maybe down here. But disappointing rally. Daily chart, getting gaps, starting to go sideways for many bars, maybe we're forming a final flag. And if we go up, we will start to turn down. This is actually kind of interesting. Two things. If you've been paying attention to what Al's been saying, we have an obvious high, and we came within 3 pips of this high. This is the March 9th sell-off. Here's an obvious low. It's a minor low. Which means it's a minor high or low. So even if we fall below it, it's still just two-legged pullback. Unless we break strongly below it, then I think we're still going higher. So this low was 108. This low was 118. So what's interesting is we almost went above this high, sold off, almost went below this low. I think we're still going to do both. Now, I have to say I will be surprised if we do not fall below this low and we break the upside. The reason for that is it's a low probability trade. If you buy above this high, you stop down here, in essence, you're betting on this. We're betting at least on a test up to the high. So I think it's a low probability trade. And I think when we get up to here, traders will look to sell. And they'll put a stop up here somewhere, and we'll scale in, betting when it goes down. Now, what if we get this? So what if we get a rally that looks like this? Or better yet, what if we get these 2 bull bars right here? Strong bull bar. And then we get this bar up here. Well, I think a lot of bulls will get out because we'll probably have a second leg. And I'd be wrong. But I don't think we'll get that. I think we will close this gap. 60-minute chart. Lots of just overlap, disappointment, sideways, broke out to the upside, reversed down sharply, broke to the downside, reversed up sharply, broke to the downside, reversed up. So 3 pushes down, 1, 2, 3. Expect 2 legs up, 1 pull back 2. And a thing, by the way, another thing about this. So we went up, turned down, probably going to get a measure move down. Probably going to get a measure move down in this bar. We got it. However, it's a trading range, so when we fall below obvious support, we're going to turn up. So you can see bulls who are buying in here, scaled in, were able to get out. Other traders, many traders would sell, scalp out here, and look to buy, use a wide stop, real quick, last thing I'll talk about is the E-mini. So, monthly chart, very overbought, and I think we're very far away from the moving average. I think we have to touch the moving average. Al's been saying that. We all know that. Same thing about the weekly chart. Daily chart, I just think the stop's far away. I wouldn't put a stop here. You can, but I think it's a low probability trade. 60-minute chart, spike, channeling up. However, this is so weak that I think we're going to test down and test this low at some point. So it's been a trading range for quite a few days. We're in breakout mode. All right, thanks for watching. Hope everyone has a great day.